Hello friends. One of the overarching themes of Trading Tact is to encourage you to be responsible for every step of your strategy development process, because that's the only way to achieve sustainable long-term success. One of the most common questions I receive is, I've got this really cool trading idea, but I don't know whether it's profitable in the long term. Can you show me how to program the strategy, so I can quickly backtest it over multiple years, instead of having to spend months forward testing it on a demo account? To answer that, I will show you how to program your own strategy using AlgoWizard, export it to MT4, and run a backtest to ascertain its long-term profitability. Let's begin.
Here's the trading idea in mind. Everyone says that the trend is your friend until it ends, so let's try a trend following strategy. I will buy when a 100-period exponential moving average has been rising for 10 consecutive bars. To get better value, I will wait for the 14-period RSI to fall below 30. For risk management, I will add a 50 pip stop loss and a 100 pip profit target, giving a 2-to-1 reward to risk ratio. The first step is to convert this trading idea into black and white logic that a computer can process. Here's a flowchart that illustrates the logic. At the open of a new bar, I will first evaluate whether I have an existing position in the market. I don't want any duplicate trades or any sort of hedging, so the first entry condition is that I'm currently flat. Next up are the long entry conditions. If the EMA is rising and the RSI is below 30, I will go long at the market price, with the stop loss and profit target added. Repeat this for the short entries, just flip the conditions. Finally, if none of the entry conditions are met, the algorithm takes no action and waits for the next bar to open. Now let's head over to AlgoWizard to convert the idea into an algorithm. AlgoWizard is a free programming tool that lets you create trading strategies without any coding knowledge. You can access it at AlgoWizard.io or head over to the AlgoWizard module in StrategyQuant if you have a license. To learn more about AlgoWizard and StrategyQuant, check out the links in the description below. Click on New Strategy, and I suggest always using the full wizard since it gives you full control over AlgoWizard's functionality. Go ahead and add the first rule. In most cases, a simple strategy consisting of if-then conditions will suffice. It's an open secret that simple strategies are more robust to changing market conditions. If you're new to retail trading, avoid complex strategies or any guru who projects an aura of complexity. Select on bar update for the rule event. On initialization and on deinitialization are only applicable when loading or removing an expert advisor, respectively. I usually only evaluate my trading conditions at the open of each bar. You can evaluate them every tick, though this will incur higher computational resources. Before adding the entry conditions, let's add all the variables we will need. First is the magic number. This is the number that MT4 uses to identify each EA's orders and needs to be unique to every expert advisor that you're trading on your platform. So if you're trading 3 expert advisors on the same market, you will need 3 unique magic numbers in total. Check the config button so you can access this field when you attach your expert advisor in MT4. We will use 2 technical indicators, the exponential moving average and the RSI. To minimize the risk of curve fitting, I recommend optimizing as few parameters as possible. The EMA's look-back period will be optimizable, while the RSI's look-back period will be fixed at 14. So go ahead and add a variable for the EMA look-back. Time to add the market flat condition. It's under the strategy control section. Having current for the symbol means the expert advisor will refer to the market it's currently attached to. You can select another market, of course, if your strategy uses multiple markets. Select the magic number you just created. You can leave the comment field blank, as long as your magic numbers are unique. Next is the trend filter in the form of the rising EMA condition. To recap, an uptrend is present when the 100-period EMA has been rising for at least 10 consecutive bars. You need to head over to the comparison section and select the rising condition. Set bars rising to 10, note that the minimum input is 2. Allow same values should be false, since I want a continuously rising EMA. The shift field lets you shift your evaluation backwards in time. A shift of 1 means the EMA at the close of most recent bar will be used, a shift of 2 returns the EMA at the close of the previous bar, and so on. Time to select the EMA for our indicator. It can be found under the Indicators section, but you can also use the search function at the top. The chart field addresses the market and timeframe in question. Like before, current means the EMA will be applied to the market and timeframe the expert advisor is currently attached to. One popular way to improve your win rate is to incorporate multiple timeframe analysis, whereby you only trade in the direction of the longer-term trend. Suppose this strategy trades on the 1-hour timeframe, but requires the EMA to be rising on the 4-hour timeframe instead. To do this, you need to add a subchart as shown. The symbol is unchanged in this case, but the 4-hour timeframe will be selected instead. You can now select the new subchart. I usually use close prices for computation. Other popular choices are the median price, which is the average of the high and low, and the typical price, which is the average of the high, low, and close. Finally, for period, select the variable created earlier. The next condition is the RSI pullback filter. You can select the RSI from the indicators list, but a shortcut is to head over to the signal section and search for the RSI. As you can see here, signals are predefined entry conditions that are commonly used. Select the RSI is lower than level condition. The fields here are similar to the EMA case, except that you will have to enter the threshold level of 30. That's it for entry conditions for this strategy. As an aside, if you wish to only trade during certain hours of the day, you can conveniently add an intraday time filter by clicking on Trading Options at the top right. Select Limit Time Range and input your trading window. Be sure to use your broker time zone. Now we have to specify the actions to be executed if the conditions are met. For this strategy, we will go long at the market price, so click on Order Open and select Enter at Market. For position sizing, I prefer to use the Global Money Management option. To set this up, access the Money Management tab and make your selection. I usually backtest with a fixed size, but you can also select the ever-popular fixed fractional approach. Here you specify the percentage of your account that you wish to risk per trade. I suggest nothing more than 2%. Patience wins in the long run. Size decimals refers to the number of decimal digits in your lot sizes. If you trade Forex micro lots, where lot sizes are in increments of 0.01, enter 2. Stop loss in pips is not relevant here, because a 50 pip stop loss is specified for every trade. Size if no money management is a fallback value should the computation fail, so enter a small value, while maximum lots lets you cap your sizing if desired. Once again, make sure the magic number is selected. I want only one position in the market each time, so duplicate trades should be unchecked. Lastly, we come to the exit methods. Simply activate the stop loss and profit target. For this case, a simple fixed value in pips will suffice. If you use a pip-based stop, but want to use a formula to compute it, select the third option instead. Another popular option is the ATR-based stop, where you can select the ATR lookback and the multiple used. Lastly, the self-explanatory price level option lets you select, for example, the daily or high or low, or indicator-based prices like a Bollinger Band's lower band. That's all the programming for the long side of the strategy. To create the short side, simply duplicate this rule tab and flip the strategy logic. The EMA should now be falling, the RSI should be above 70, and the trade direction should be short. Once you're done, click on Source Code at the top to view the fruits of your labor. I generally use the pseudocode option as a sanity check. Use this to check that your idea has been correctly programmed. If all looks good, it's time to export the strategy to your trading platform. Make sure you have the correct money management method selected. Numerous platforms are supported, such as TradeStation, Multicharts, JForex, and MetaTrader 4 and 5. I'm an MT4 guy, so I'll select the MQ4 option. Save the algorithm to your platform's directory. For MT4, it's the MQL4 Experts folder. Now open your MT4 platform and the Expert Advisor should appear in your Navigator window. If it's not there, refresh the Expert Advisors. Open up the Strategy Tester by pressing Ctrl-R, then select the EA and open the Expert Properties to make sure all parameters are configured correctly. The time filter options are always present, even if you did not program them in previously. If you want to use them, just change them to true. The test model is a bit of a tricky issue. MetaQuotes has a reasonably good explanation of each of these testing modes. In essence, with open prices only, the Expert Advisor logic is only evaluated once per bar, at the open. The OHLC prices from all the previously closed bars will be applied to the expert advisor. Note that each bar will only be represented by 4 prices. For strategies that trade on the higher timeframe, this is usually not an issue. But if you like high-frequency scalping, where a couple pips can make a big difference, backtesting on real ticks is a better option. Since our expert advisor only evaluates logic at the open of each bar, the open prices only model will suffice. The spread here is in points, so 2 pips equals 20 points. This should be conservative enough for liquids markets like the euro-dollar. Before evaluating strategy performance, I highly recommend running the strategy using the visual mode to ensure it's bug-free. First, ensure that you have sufficient price history downloaded. Open the MT4 History Center with F2 and download all your broker's data. In this example, I have 1-minute data dating all the way back to 1999. Next, you need to make sure your chart can display all the data you just downloaded. Go to Tools, Options, Charts, and max out your max bars in History and max bars in Chart. Back to the strategy tester, now check Visual Mode, and watch the expert advisor run. Add all the relevant indicators to your chart, and better yet, save them as a template for easy access in future. Use the pause key to pause the simulation, or the F12 key to move forward 1 bar at a time. If you run into some errors, the Journal tab may offer some insights. Here's a list of common MT4 errors. When all the debugging is done, uncheck the visual mode and rerun the backtest. Check out your list of trades, equity curve, and some basic performance statistics. If you want to export your report to Excel for further analysis, right-click and save as report. Alright, that's all folks. With this knowledge, you can say goodbye to blind faith and trade with greater confidence because you know your strategy has demonstrated historical profitability. Be fully accountable in your trading and do your due diligence before deciding on a trading strategy. For more backtested strategies, check out my trend following strategy playlist at the top right. To learn more about StrategyQuant's suite of robustness tests, check out the playlist at the bottom.